We created a stupendously simple but surprisingly effective way to screen stocks and find the best undervalued companies at any given moment. We did this by using a basic stock screener tool, which your broker probably offers. They are also available free online. The settings for our screener are incredibly simple but surprisingly effective. The Furatena Signal, as we call it, is a very powerful way to see companies that might be objectively underpriced in some way. What it lets you do after is make your own subjective decisions on which companies are actually decently undervalued or which companies are actually worth an investment at these prices. The decision to invest in a company found on the screener should not be one taken purely from factual data and technical signals. It should be a personal and subjective decision based on your own knowledge and assumptions about the company and its future. I want to talk about subjectivity in investing for a second. What determines a stock price? I mean, we all know that stocks are companies which have revenues and pay dividends and have different growth rates and so on and so forth, but that information alone does not determine the price of the stock at every given moment. A stock with a $100 billion market cap and $5 billion in earnings might have a market cap of $98 billion the next day. What happened between one day and the next? Did the company suddenly lose $2 billion in value? Well, this type of sudden price move without any significant change in the company's fundamentals is only thanks to one thing: subjectivity. If one stock is currently losing clients because of AI, the price will fall due to heavy risk on their business. But then a stock with a similar but not entirely correlated business model might also see a price decline even if their business hasn't been affected by AI in the slightest. Why? Because people are subjective. They often make decisions using their emotions instead of facts. Humans have a tendency to trust their intuition even more than what they might be seeing with their own two eyes. But for a stock worth billions of dollars to have the stock price crash, it is not thanks to a handful of individuals being guided by emotions. It shows the overall average of thousands of people's emotional responses to the most recent events, meaning even though the objective data is publicly free for everybody to see, people still will make their decision based on short-term emotional reasoning. This is not a flaw in financial markets. I would argue it is its best feature. Thanks to the occasionally unreasonable emotional judgment from thousands of individuals, amazing stocks are often priced below their intrinsic value for no real reason. That's where we come in. We have the Furatena Signal as a spreadsheet included in our subscription, but you could create the same effect using any free stock screener available on Google, just by adjusting the settings the same way we do. Like I said before, the Furatena Signal is incredibly simple, but surprisingly effective, and here's how we do it. First, choose the 3-month stock price change as the first setting. Set it to down by more than -10%. Then, adjust the screener's sorting by setting it to market cap high to low, and that's it. Now, what does this tell you? All the stocks that have recently come down enough that they might be undervalued. What we do next is simply scroll and look for the companies which we personally recognize and know are good. Take a look. If we use the signal today, May 19th, 2026, we can see some amazing and well-known companies which have recently had a price decline. Tencent, Alibaba, Toyota, General Electric, Home Depot, McDonald's, Blackstone, Lockheed Martin, Mercado Libre, which we did an analysis on, and it turns out it might be very undervalued, Nintendo, Mercedes, Chipotle, and many, many more. What we do is take this list of the companies which we know are good and people like, and then check their financials to see which ones are actually down by more than they technically should. Then we look at the reasons it's down. Any discrepancy in their earnings, what's on the news, maybe it's related to something macroeconomic or geopolitical. When we gather both the fundamentals and the reasons for which it's down, we then can make our own decision, which is half objective and half subjective, determining whether the stock is a good investment or not. So, that is basically our Furatena Signal and a very oversimplified description of our investment process. Stay tuned for our personal list of the top stocks which we have found using the signal. Subscribe to our Furatena subscription to access this spreadsheet and the 3 others included in the subscription, plus our stock and investing research.